Buyer demand is extremely low right now, and at the same time, this always happens the week before Thanksgiving. So it could be a combination of different things. However, the fact remains that demand has reduced to 45% of what we had a year ago. So I don't blame you if you think that this is what a crash looks like. But let me stop you right there, because the active listing counts, the homes for sale in the MLS, is also very low and declining. And there can be a crash until there is an overabundance of supply of something that nobody wants to buy. So not the case here. We do not have an overabundance of homes for sale. So what the heck is going on? If it looks like a duck and it walks like a duck, well, keep watching. My name is Celina Acosta with eXp Realty, your Phoenix, Arizona real estate agent, with your market update for the month of November 2022 coming up. It seems that sellers are even more discouraged than buyers, and new listings are coming to the market too slowly to meet demand. Like I mentioned earlier, this time of the year is when we usually see that decline, which happens between Thanksgiving and the end of the year. But this year it started a little bit sooner, and the numbers are falling at a faster rate than usual. So we moved from a seller's market in April to a balanced market by July, and we are now entering a buyer's market as we speak. It all started with the cities and towns in the outskirts of the metropolitan area. If you can remember me saying that in previous videos, Buckeye, Maricopa, Queen Creek, and Santan Valley have been buyer's markets since July, and then one at a time the rest of the cities followed. The only holdouts remain that are the cities of Paradise Valley, Fountain Hills, Cave Creek, and Scottsdale. So to recap, the 2022 peak of price was achieved in May, which was the result of contracts accepted in late March or April. Starting in June, buyer demand came down due to mortgage rate increases. I had several contracts fall due to mortgage rate increases in June. That's where all started to crumble. So the first rate hike was in June. I kept telling people who were on the fence at that time that there was going to be more rate hikes, and sure enough, that's exactly what happened. We've had several interest rate hikes since, and everything happened so fast. This has been one of the fastest rate increases in the shortest amount of time in history. Mortgage rates are still in the high 6s to low 7s, and they continue to keep buyer demand low for now. This provides an opportunity for buyers, as more sellers agree, to contributing to closing costs and rate buydowns, which was not happening at all when the market was hot and interest rates were low. Right now, according to the latest data, in the last 30 days, we saw almost 48% of sales, so half of all sales basically, involved a seller contribution to buyers at closing, with a median contribution of $7,400 in October, and so far in November, we're showing a median contribution of $9,000. If you were one of my clients, you got more than that. This is not doom and gloom for sellers at all. Yes, you will have to give a little more, and it will cost you a little more to sell than if you were selling a year ago, but you will still walk away from the closing table with a profit. If you are buying, this is a way better buying environment than a year ago. People are focusing on the short-term price drops since May, but if you look at the big picture, you will see that appreciation rates for homeowners who have owned their homes for at least 2 years are still very impressive. Approximately 65% of MLS listings, excluding new construction, have been owned for 2 years or more. Here is the appreciation rate based on price per square foot. Almost 85% in the last years. That's very impressive. So yes, demand is almost half of what we had last year, but because we had 34% less listings of what we usually get between October and November, the lack of supply is putting less downward pressure on price. Not to say that prices will not decline. They will, and they are, but it would be worse if we had an oversupply of homes for sale. So what does it all mean? As the greater Phoenix glides into a buyer's market this month, year-over-year appreciation rates are likely to turn negative in 2023. Generally speaking, neither sellers nor buyers like to engage in real estate during times of uncertainty, and there is a lot of uncertainty going on right now, from dramatic fluctuations in mortgage rates, instability in the stock market, high inflation, unemployment, etc. And all these things affect buyer sentiment, and people are pushing the pause button. However, as soon as the mortgage rate drops, people will get off the fence because the need for housing has not changed. They just announced that we have 7.4 million people living in Arizona. Do you think there's enough housing for everyone? Absolutely not. People need a place to live, so demand will come back either next year or in 2024. The big irony in waiting for the market to bottom out before purchasing is that no one knows they're buying at the bottom when they buy there. The bottom or the top of the market does not become obvious until 3 to 4 months after you close on the sale. And by that time, most buyers figure out that the market hit rock bottom and it's already too late. So there you have it. I hope this was helpful. Don't forget to like and subscribe so you get notified when I post a new video, and let me know what you think and your comments below. Until next time.